We're having some technical difficulties with our app, so stand by there. But we made it work, and we are here. So if you are catching the replay, go ahead and comment replay. If you are on now, feel free to say hello so we can see that everything's working. I'm going to get the group. Oh, hold on. I'm going to get the group going as well. So let's see. Are you on? Say hello. Let's see if anyone's on. They probably were waiting since we were running behind a little bit. We are talking land development. We're going to be talking about, how to find it, how to fund it, and how to navigate it. So that will be today's topic. Laura, are you ready to get going?
Yeah.
Okay, go ahead.
Okay, we're jumping right into it. Great.
Yes, we
Okay.
are. Today we are.
Okay, great. So let me give you a little bit of a history behind what we talk about when we talk about land, right? So a lot of investors don't think about land as, funny enough, you don't think land as a real estate asset that you can do something with, but definitely you can wholesale land, you can develop land, you can even rent land, you can do a lot of the same things you do with quote unquote property, the same thing you can do with land. So, and the other thing I like about land is that it doesn't depreciate, right? It's just something that is there. There is only so much land that is available. So, what are some of the key benefits in investing in land? Well, number one, there is a little to no competition. Like I said, a lot of real estate investors don't particularly think about land as a viable investment for some reason, right? So little to no competition. It's easier to acquire. Landowners tend to be easier to deal with, especially if they own this piece of land for a while, or maybe they inherited it, or they bought it, with maybe thinking that they were going to develop it, but they never got around to it, and they still have to pay taxes every year. They have to maintain, get the grass cut, and so forth. So it's easier to acquire. I find that there's more motivation. The appreciation, land values have consistently gone up over the long term. Okay. And passive income, like I said, you can rent the land, you can lend land to developers for like commercial development. A lot of these commercial developments, they are on land that's leased, not owned by the property. You can have hedges against inflation. That's another thing. Land access hedge against inflation because it maintains its value much better than a lot of the other assets that happen, when we go through different spikes in inflation like we had here done recently. And that's also a tangible asset. I like real estate. I like land because it's there, right? You're not going to move it. It's always going to hold this value. Now, with that said, one of the key things about land is definitely location, 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 right? So you want to buy land that is around maybe one of the primary markets. So, for example, is land that's near development or a city, something that's maybe coming out towards the area. But even land in the country is fine as long that is not just a piece of land in the middle of nowhere where nobody really cares, but maybe near water. Like I know somebody that he buys any type of land. It can be near a stream, it can be near a lake, and so forth. And then he sells them as camping lots, or he sells them for people that want to put a cabin on there, right? So there is definitely a market for land that's always near the water. So with that said, I want to also give you 7 steps to land investing. And the number one is define your purpose. Step one, okay? So before you go into the world of land investing, is ask yourself, what's the purpose? What do you want to do with this land? What is your exit strategy? Because you want to be clear. Otherwise, you're going to buy all this land that you have to pay taxes on and maintain it, but you have no use for it. Just to own land is not something that can help you as an investor unless you have a purpose for it, right? The second of it, like I said, location, location, location. One main suggestion, like I said, is to buy near primary markets where there is some type of demand for this particular land. So now there are several websites there that are very helpful in this respect. One of them is nar.realtor. The other one is city-data.com. And they provide a lot of market research, statistics, and so forth to let you know about job growth, economy, demand, and all the type of stuff. So I definitely suggest that you do a lot of research on the location. The third thing is about financing. How are you going to finance this land? Are you going to do owner finance it? Are you going to buy it? Are you going to wholesale it? You can wholesale, so you can use the end buyer's funds. Are you going to tap into private funds? Are you going to use personal line of credits or create joint ventures? Now, keep in mind that with land, that's another thing that's appealing about land. It's not going to be expensive as improved property, right? Property land that has a house on it. So with land, sometimes you can buy land for definitely pennies on the dollars compared to if it was already improved. So you might not need a lot of money to buy land, but it has to be in strategic location. So let me give you I'm going to give you under the next category a couple of examples of what I had went through. So another step 4 is finding leads of landowners. Like I said, is usually landowners are more motivated than properties owners, where there is a dwelling on it. Especially if they own the piece of property for a while, piece of land, and they just never got around to it. So how do you find these people? Well, I'll give you a couple of ways that I found them. And honestly, I kind of stumbled into it. One of them is tax delinquent. A lot of people that owe taxes on land, but they don't necessarily, they pay for them. They never really got around to think about what they're going to do with it. Maybe at one point they had a plan, but, they're postponing. And all of a sudden, if you approach them and say, I want to buy you a piece of land and pay off your taxes on it, if you're behind on their taxes, by all means, right? I found several pieces like that. The other one is, MLS agent listings, and for sale by owners. If you've been on the MLS for a while and for sale by owner, again, it's land, because a lot of investors don't think about land like that. And also tools like PropStreams. You can pull up land on PropStream and really kind of blanket market it to everybody. Now, let me give you a couple of examples from my own experience. One time I bought this house, and I don't remember if it was an REO or something, a house that needed work. And I bought this house, and there was this vacant lot next door. So I said, well, I can buy the lot next door, and then I can put a new house on it. And so what I did, I literally went on the county records, find out who the owner was, sent him a letter with an offer inside the letter to say, hey, I want to buy you a piece of land. I'll pay $5,000 for it. I own the house next door, so it makes sense, even in his eyes, that obviously I was looking for that piece of land. So he contacted me, he called me, and he's like, okay, I don't want to do anything with the land anyway. So I bought that land for $5,000. So went through title like you do any regular purchase. I decided then I was not going to put a new house on it. I said, I'm just going to move on. And 2 years later, I says, I'm not going to build anything new here right now. I sold it for $36,000. And the only thing I had to do is literally pay taxes for a couple $100 a year for 2 years. And then I don't even remember if I sent anybody to clear it out or clean it or anything. I mean, that was it was a location near the city, and the area was developing. Not at that point. Actually, that point was pretty, dilapidated, honestly. But it was coming into the path of progress there, and so it was a good place. Another time I bought this other property. Actually, I bought a house at auction, and they were auctioning off the lot next door to it. So the same owner had both, and I guess he let them go. So I bought both of that. The house was, I paid for the structure. That was in pretty good shape. And then the lot next door was only like $500. So I bought that. And then I decided that I didn't know what I was going to do with it. Well, the city approached me and they say, if you donate this to the city, we want to build a dog park. We're going to give you a tax break for the next 3 years, $100,000. I don't remember what it was. So yeah, of course, So that's another thing I did. So I bought it at auction. Another way, one of the things I do a lot is literally I see, like you go driving for dollars, I see vacant lots and I contact people. And I get more response on the vacant lots, people calling me back, than properties that are vacant or abandoned. So there is definitely a market there about finding leads. So I just wanted to give you a couple of my examples. And now, how do you market to these leads? Well, remember what I said I did with that lot? I literally sent him a letter and I attached an offer. It was a one-page offer and say, and I knew they probably was not going to sign it and send it back to me. But most of the time when they get this offer, I had one time actually they did that. But most of the time they'll call me back and then, there might be some type of negotiation. In that case, he was okay with the 5,000. So it was just a matter of, him making sure it was the real deal. And then he signed the contract and then opened escrow. So sending what they call a blind offer together with a letter is a good way. And then my suggestion is also that you follow up a week later. If you don't hear from them, follow up with them and see, hey, did you get my letter? I sent him an offer on that piece of land. Now, the number 6 is due diligence. So once you got everything squared away, now you have the property under contract, obviously you want to put a contingency on the contract that it has to have marketable title, and also that you want to do your due diligence on it. You want to make sure zoning, what are the zoning laws, what are the land use regulations, what are potential restrictions. When you run title, you're going to find the property history, the boundaries, environmental factors that might impact the investments, right? You want to make sure it's not a dump ground, okay? Although I did buy one time, there was a piece of land, it was behind, I had this building, and there was this piece of land behind it where everybody kept dumping all the trash, and I was tired of that. So I decided to buy that piece of land. Okay, actually it was from the city. And I bought this piece of land and I got it cleared up. And then I attached the land to the property. Well, it spiked I bought it from the city, a couple thousand, not even that, I think $1,000. But it spiked my property value of the main property, $20,000 because of this extra land. But the thing is, it wasn't dumping ground, but I got it cleared up. And but I suggest you don't do any due diligence until later. You're not going to do, even for real estate, even for regular real estate, I don't do due diligence until I have the property under contract, because I'm not going to waste my time, right? And so then you pursue it afterwards. And finally, step 7 is closing. You close on the deal, and then now you get into your exit strategy. Like I said, I've added it to buildings. A few times I've actually added the lot to my building, so increase my property value. And then also you can build on it, right? I've donated the land. We even had an auction one time. We did an event, actually it was in St. Louis, and we gave away land for free because we had purchased the land for $60 and just lots of land. And so we gave it away for free to people at the event. And I'm like, wow, they're auctioning off land. It was valuable. It was valued, over $1,000, but we gave it away. We bought only for $60. The other thing is, like I said, tax delinquent properties. It's a really great resource to find land. Okay. So, to summarize, the main thing is make sure you buy properties in primary market, in parcels that are in strategic location. And also, like I said, don't be scared of it. A lot of investors don't get into land. We had actually one student here in Florida, and she got into land investing in Tampa, and that was her main thing. And I never really focused on land specifically. For me, it's more, I came across different instances where I have invested in land, and I can tell you to this day, I never had a bad experience. It's always been positive investing in land. And honestly, I wish I would have kept some of the land. Like the land I got for $5,000, and this was about 20 years ago. Right now it's valued almost $200,000 because of what happened to the area as far as development.
Awesome. Okay, so what did you guys think? What were your key takeaways from listening to Laura speak on land? And yeah, actually, I have a my lady that does my facials, funny enough, she used to invest in land with her ex, and they were making $50,000-$100,000 every couple of weeks on one or two pieces of land close to Fort Myers. So this is something that there's a lot of money in this. There's a lot of opportunity here, and you should really look into it if it's something you think is interesting and you know that land is in your area. Like the land around my house used to go for $70K for the same plot of land that now goes, you have to buy that one piece of land in 3 years for $150K. So it's, yeah, there's a lot of opportunity there, especially if you get in while it's lower and you know the market's about to go crazy there. So in the meantime, though, what we're going to do is we are going to talk about our raffle winner, and then we're going to talk about some things coming up that you might be interested in. So our raffle winner, how do you get access to the raffles? Is you join our Facebook group. So if you go to Real Estate Investing Women, fill out the what am I doing? Questions, and just start commenting like crazy. And I just realized that there's an apostrophe there and there shouldn't be. Okay, anyway, so I realized it now, not when I reviewed it there, but that's okay. And so you'll start commenting like crazy and just start winning. We take the top 3 commenters in the Facebook group as a thank you for giving back to the community and interacting and helping out. And we spin a wheel, and every week it could be the same person. Like we've had a couple people back to back just because they were the luck of the wheel. And then we've had different people. So this lovely lady has been contributing a lot. So you will get a $25 Lowe's gift card and a ladies toolkit sent to you. And so all you have is 1 week. You have to watch this live. We do not tag. We don't do anything like that. Just watch the live, and that's how you claim your free gift. So our winner is Eliza Silver. So congratulations, Eliza. So happy for you that you got to win. Congrats. So I'm going to bring up some of our things. It said this sounds like a great strategy, very interesting. There's a lot of development in my area, but we do have a question coming in. So one question, Laura, is do you comp land the same way as other properties?
It's a very good question. Very good question. Well, yes and no. Okay. I'm sure a lot of you agree that sometimes it's hard to comp land because you might have a piece of land and it's the only one for blocks and blocks, right? And so the best way to comp, and honestly, it's hard to comp land by itself when it's in a situation like that. If there's other lots are sold, that's easy. But what do you do when a property is in the middle of our property? Well, I look at the assessment value of that land or that piece of parcel, and then I look also at the values of the other property that have a structure on it. So, for example, if I have houses around it, I look at what those assessments value is, and if you go into the assessment assessors tax assessor website, they will split land value and dwelling, right? Because the dwelling is depreciable, but not the land. So I take that in consideration. And so that's one of the ways that I do it. And honestly, I always tend, if I buy this land, or if I want to, well, like always, you want to ask the seller what he has in mind. Then I go to the tax assessor. Then I go into, depending on what I'm going to do with this piece of land, right? If I am going to develop it or if I'm going to wholesale it, then I want to see what the market is doing first. So I go and say, okay, so if I'm going to put a house on here that's going to cost me $300,000 to build, and I'm paying $50,000 for this piece of land, is the house going to be selling for $450 so I can make, a good profit on it, right? So it's all a function of what I'm going to resell at the end if I'm going to develop it. If I'm going to wholesale it, then I'm saying, okay, is the market going to, so I might put a contract on this land like you do for real estate, and then I'm going to put it out there in the market, see the market is willing to pay. Like, for example, when I did that lot I was telling you guys at about for $5,000, And this is a funny story, actually. I bought it for $5,000 and then I was going to sell it, right? So I went and did my research comps. There was no comps in the area. It was only this little piece of land. There was that property on Euclid, Liz, that I used to own. And so I said, okay. I did the assessment, and the assessments was showing a certain value. So I put it on the MLS for 15,000. Okay. Within 24 hours, I literally had 5 offers. I mean, and this was not when the market was hot. It was a regular market. So I was like, whoa, I underpriced it. So I doubled my price, 30,000, and I got 2 offers, and one of them came in at higher than asking price, because I told this first offer, I said, hey, a second offer, I said, hey, I have another offer on the table, and it came in at $6,000 higher, because I guess he thought the other offer was 35. But with that said, I would have got even more, but I was fine with that, because I figured that, to build a house at that point was going to be about 200,000, and then you have the land, and the houses in the area will sell around 300. So I couldn't really push it too much. Otherwise, the developer was not going to make any money. But this is how you comp land. So it's not really an exact science. It's hard to comp land, but this is what I do. So hopefully they help you out.
Awesome. So before we close out this, I would still love to hear, because we have quite a few people on, what your takeaways were, if this was helpful. If you are curious about learning about land and more, we are actually doing a 5-day masterclass coming up on February 5th. And anyone that's attended these Laura, you can hear you typing. Anyone that's attended these masterclasses in the past know that these are amazing. Why is it $7 versus the $27 we used to do? Because after seeing how many people we have helped at the retreat by offering it for free, we decided to also start making other of our events a little more affordable so that everyone gets the right knowledge, since so much is out. It's over the course of 5 days. It is live, and you can access the recordings anytime within the week, as long as you're in that Facebook group that we're hosting everything. This masterclass will be covering wholesaling, buy and hold, from long-term rentals, midterm rentals to short-term rentals, fix and flip, private money, creative financing, you name it, we're covering it. We're going to have guest speakers there, and anyone that has met some of our coaches know how amazing they are and how much information they give out. We have had many, many people put deals under contracts during the week that they are in this masterclass, or have told us that we are one of the very few coaches that actually break it down to tangible steps. We just actually got that feedback the other day. So when I tell you that this is such a great masterclass, I mean, it's only $7, and we highly recommend attending. Laura, anything you want to say with that, alongside that?
No, I mean, this masterclass goes a lot more into the different strategies and how to set up a system. And I know a lot of you are looking to do this business virtually. So this is also what it talks about as well. So there is a lot that goes into this particular masterclass. It's hard to explain here in just a couple of minutes, but please click on the link, go to the page. It goes a little more details, gives you the breakdown day by day. The other thing is a lot of interactions that happen in this group. We have a group just for this masterclass, and this group is on fire the whole week. So I want you to really see this, how amazing this is, and only for $7, guys. And why do we even charge $7? Because we want you to be serious. Because I know myself, a lot of time I found things online, and if I don't think it's really going to benefit me or I'm interested, I say, yeah, you know what? I'm not going to even walk to the bedroom and get my wallet, right? So the people that actually get out of their chairs, get their wallet and pay $7, I know that you guys really want to know this information. And so we wanted to be part of this community. So I hope to see you there.
Yes. All right. Well, everyone have a wonderful weekend. We will talk to you soon. I hope today was great information with some feedback that you could walk away with, and we'll see you soon. Bye, everyone.